Hi, everyone. This is Angel Hallman here with Resilient Realty Group, and we've got Kevin Goodpaster, also from Resilient Realty Group. And we've been getting lots of questions from buyers. We have in the past, but a lot more lately since we've been getting so many calls because buyers are really ramping up and getting ready to get out there. So we've invited Brandi Mounts from Loan Depot on to answer those questions for us. And these may be questions you've had before or some you've never thought of. So Kevin, would you like to ask her first?
Yes. So one of the big questions I'm getting right now is how to estimate what your closing costs will be. Not necessarily what goes into it, because that'll go over a lot of heads, but just if you have this price of a house, what can they project to say, or what can they project to spend on a closing cost?
Sure, that's a good question, and I get asked that all the time. Without getting into real hard numbers, the best way to estimate it to properly prepare would be about 3% of your sales price. So if you are buying a $200,000 home, you can anticipate that there would be about $6,000 in closing costs, which include your prepaid items, which is setting up your escrow account and prepaying for 1 year of homeowners insurance. That's the typical. Now, if you were doing a 20% down payment, the larger down payment, then you have the opportunity to hold your escrows and pay those on your own. And if that were the case, then it would estimate the cost due at closing at about 1.5%.
Okay. And then you can put your earnest money towards that amount.
Absolutely. So what the earnest money is, obviously, is you write the check to the title company, and that's kind of your skin in the game. It lets that seller know that you're ready to move forward and you're taking this seriously and you're putting some money on the line. Whatever money that is, 100% of that will be given towards your bottom line, whether it be down payment and closing costs or whatever it is due at the closing table. So your earnest money and your option money are 100% given back towards the purchase of your home. So if your closing costs were $6,000, you could basically say that an additional $5,000 were due at closing because you had already put down that $1,000. Does that answer that question?
It does. And then where does down payment factor into closing cost and earnest money?
Well, the down payment is the percentage of your house that you're financing, okay, or it's what the remainder is. So with FHA, it's a 3.5% down payment. With VA, it's 0. Yay, VA. With USDA, it's also 0. Conventional is 5, and so forth and so on. But whatever it is that you do pay down, all of that is part of that earnest money. So whatever you put as earnest money will be applied to either your down payment and or closing costs. It's all applied to the bottom line, regardless of the program that you're using.
Awesome. And then just to clarify this, what are minimum credit scores for FHA and conventional right now?
Okay, that's a really good question. As things have been kind of crazy lately due to the pandemic that's going on, as businesses are starting to open back up here in Texas tomorrow, we've already seen things start to relax tremendously. For example, no one was doing cash out refinances in the state of Texas. As of yesterday, we can now do them again, which is huge because if people haven't been able to work and they're needing to take some equity out of their home, now is a great time to do it. And now Texas is allowing that to happen. So typically FHA is between $520 and $579 is a 10% down payment, and anything over $580 is a 3.5%. What most lenders are doing are putting like a $640 or a $660 cap on that, but we're still as low as $620. So that means that if your credit is at the $620 range, then you should be eligible with other parameters to qualify for FHA financing. So as this comes down a little bit, we'll go back down to where FHA allows that to be, which is $520.
So that leads into the question I had. I had a lot of people calling about down payment assistance programs or closing cost grants. And there's a lot of lenders saying that those are completely shut down, but then I'm hearing Loan Depot is able to do it and a few others out there. So what are the for those?
Absolutely. We are still absolutely still doing down payment assistance. It was a little sketchy there in the beginning, not knowing we didn't know what the state was going to do. We had no idea, so we put a temporary pause on that. But it is back and running. A little bit harder restrictions, but that's not set by Loan Depot. That is set by the state. Typically, it would be a 620 FICO, and now it would be a 640. And it used to be whatever debt to income ratio still made sense and still scored, meaning it still met all the parameters for that loan profile. Now it is a little bit more strict on the overall debt to income ratio. So if you're not familiar with what a debt to income ratio is, that's like whatever your annual salary is, divided that by 12 for 12 months. And we're able to use half of that to go toward, or 45% right now, to go towards your house payment and all your other liabilities on your credit report for down payment assistance only. That's the only one that's that strict right now.
Are there any delays with closing, or are you able to still close in around 30 days?
Absolutely. No, we're all on board. We have about 7,000 employees working remotely right now, which is absolutely incredible. And as things are going back to normal, they're going to start bringing them back into the offices, as show no additional outbreak. But no, we are still at 30 days or less on all purchases. So, and refinances are about 45 to 60 days. I am in the battlegrounds there with y'all, and I understand that purchase business is by far the most, not to say important, but the most, there's a lot of other families waiting on that home and that home and that home and that home. So the purchase business always has to stay number one with us.
And Kevin, did you have any other questions that you thought of that people have been asking you lately?
Just this morning, what are interest rates sitting at right now?
Interest rates are really, really good. So I can't really just throw out an interest rate because it's all based on certain parameters that a certain borrower falls into. But they're at an 8-year all-time low, and we anticipate that they're going to continue to drop as the economy is here to be stimulated. Now everybody's going back to work. People are going to start spending money. Interest rates are going to continue to be low to help offset some of the panic that happened from all of this. But, I can say without a doubt that it is the time to buy. I mean, everybody still wants to move in the summertime to be ready for the next school year. That's still going to happen, and we're able to overlook people we don't have to dock income from people who have had to be on workman's comp, on unemployment due to this pandemic. So we're not going to hold it against you that you were not able to work. So all of this still, you were able to qualify in February, you're still able to qualify now, because we're not going to hold that against you based on release that you had no idea. Yeah, it is.
That is good to know.
Yeah.
That's something I had wondered about, because I feel like some people haven't been affected economically, but a lot of people have, and I wondered how that would play out for them.
Yeah, absolutely. And so also, there are a lot of people who are doing a forbearance on their mortgage right now. And I'm sure I've seen it going around Facebook as all of you have as well. Forbearance does not mean that that's added to the end of your note. It's like if you called and extended your car note, or you had 60 months, they're now at 62 months. So it's completely different. It's basically just set on pause that it's due. But once that forbearance is over, every single bit of it is due. So if you're in that kind of situation, please feel free to give me a call, and I'll be happy to walk you through or try to help you find that solution. But that's another reason why refinances are super important right now, because if you have a lot of equity in your home and then all of a sudden 6 months of payments are due, that's the time to refinance. Take out that equity that you have to get caught up on everything and take advantage of a lower rate.
Or sell and...
Or sell. Or you can sell and buy again.
Yeah. Well,
It is a good market.
Well, I like how you've explained everything, because someone who's maybe never purchased a home or hasn't in a while would understand exactly what you're saying. And then also it was great to hear about the unemployment not affecting people. So that's awesome. Is there anything else that you're seeing that you think we should know out in the mortgage world?
Well, as of right now, we're still doing e-closing, so it's 100%. No hands-on type of stuff. So that's cool. That people are looking. People are out there calling. My phone rings all the time from great agents like you and Kevin who are out there trying to keep things going, helping to reassure the people that were in your pipeline from the beginning of the year who have gotten scared. Now is the time to call Angel and Kevin to get this going for you, because by the time you're back to work and all that, those homes are going to be ready. So it's a good time to get going out here in North Texas.
It really is. And Kevin and I both, our phones have been ringing more. We've been showing a lot more. And then there's been several situations with multiple offers. Both him and I have had people that missed out on a home due to multiple offers. And
yeah,
that wouldn't be going on anymore, but it's because our inventory is just so low, really.
Yeah. It's really, I'm hoping that 2020 turns into a good second half of the year to make up for this first half.
It's going to be awesome. And we've tried, so that makes it even more awesome.
Yeah.
All right. Well, I guess we're about done here today, and I'll go ahead and post this for everyone to see that maybe these are their questions they had, and then they can feel free to comment if there's questions that we did not ask and that you didn't answer that they had, and I will put all of our contact info in there so they can reach out to us too. So
awesome. I appreciate y'all giving me the opportunity to talk with you.
Right. Thanks for helping us out.
Yeah.
All righty.
See you later. Bye-bye.